In this video, I will be speaking about GBP USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong level of previous monthly support, which was acting as support all across this zone, which now that the market has broken it to the downside is acting as resistance here. And as the market is testing previous support and resistance, we could expect some bearish price action to be developed away from this zone. Dropping down on the weekly, what we can see is that from a weekly perspective, the market just tested and started to reject a quite strong area of previous weekly support, which is now turned resistance. Now, as the market is testing previous support and resistance, we could expect more bearish price action to be developed away from this zone. Going down on the daily time frame, what do we have? Now, here on the daily, the structure is quite simple. We have a market which was finding support at this zone. Multiple times, the market tested the area and rejected it to the upside quite aggressively. Now, what we know is that previous support, once it gets broken to the downside, becomes resistance. So all this previous support is now turned resistance at this area. In shorts, making the pound weaker, and in fact, the market managed to break below this support. So after the break, what we had essentially is the creation of an impulse. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up perfectly with previous support turned resistance, creating a confluence of resistance at this area, which we could expect the market to potentially test and then to reject to the downside. We should see more shorting from an institutional perspective. So if the market will go and retrace to this confluence of resistance, how we could be approaching a potential rejection to the downside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.